Hi everyone, welcome back to our podcast Constructive Conversations. I'm Meghna Gummi, CEO of Ark Group. In this podcast, we deep dive into topics related to the infrastructure, real estate, and construction industry. Today, we have a very special guest with us who is top in his industry, who's known for his financial services, Mr. S. Radha Krishna, founder, partner, and managing partner of Asia Pacific Incorporation, who are corporate advisors and investment banking advisors as well. API has been in the industry for 22 years. Mr. Radhakrishna is a product of IIM Kolkata and is known very well known for his speed and commitment in facilitating and closing deals for corporate and international clients. API in the last 10 years has raised funds over 15,000 crores, has closed 600 plus deals, and also a worth of 2 plus billion US dollars. So when it comes to my mind to talk about financial advising or financial services, Mr. Radhakrishna is the first one that comes to my mind. He's very well known in the industry, has a lot of clients in Hyderabad and across South India, and knows the nooks and corners of the finance industry in real estate, infrastructure, hospitality, healthcare, and many other industries as well. But today we're going to talk about finance and real estate and understand more about what goes into it from the expert himself. Thank you, sir, for joining us on our podcast.
Thank you, Meghna. It's really a great introduction that you gave.
I'm
Thank you
actually
very
excited for this one because it's a topic that people usually don't discuss much about. And I think I personally also didn't have a lot of knowledge before I started working. So it's very exciting to know more details about this industry. So just to start off with, could you just tell us a little bit about yourself and why you chose the finance industry and why it's interesting?
Yeah, it's an interesting question that way. See, I and my elder brother, started this company way back in 22 years back in 2002 or so. So the genesis of Asia Pacific Inc. has come through our own experience. My father was always an entrepreneur. He expired in 98 when he was 82 years. But all his almost 75 years, he was an entrepreneur.
Oh.
But because of the ecosystem then, it's more than, it was every business was an experience by itself.
Yeah.
It failed, then he stood up, it failed, he win sometimes, then it failed again. So it's like a roller coaster for him in terms of his entrepreneur journey. So my brother started being with him, because my brother is almost 14 years elder to me. So I was a kid when they both started. So I was part of the roller coaster. Going along with them. So what we learned is basically it is very important for an entrepreneur to have right knowledge about finance, right access to that finance, and right usage of the finance.
Yeah.
So this we have learned in a very hard way. So this I always have used this knowledge as what should not be done and then built upon how do you will have to build your businesses or entrepreneurs.
Oh.
So that experience was inbuilt with me in my own through my childhood days. So that has helped me, I believe, in understanding the business, its complexes and the solutions to it.
Oh, wonderful. So, sir, just to we'll deep dive right into it. But nowadays, financial planning has become a huge aspect of any individual's life, whether it's an entrepreneur or an individual who wants to invest their income. Earlier, the knowledge to the access for money or how to spend your money was very low. So today, can we break down? We'll go into 3 segments. One will talk about individual investments, one will talk about corporate investments, and one where the market is going. So to start with, I think it's a hot topic right now where everyone's talking about market trends. They're saying that US is going into recession or there's global recession that's going to happen. So can you just tell us a little bit about the market trends across India and a little bit about what's happening in Telangana?
Yeah, I'll start with the US because it is hot topic now. Now Trump has come back with great victory.
Yeah.
I think the US economy is going to see a lot of tax cuts which is from Trump government, because that is what is popular. He makes him popular, made him popular, and that is what his agenda is when he comes back to power, which is good for winning an election, but not for an economy.
Yeah.
So cutting the taxes is going to take U.S. economy again to another round of bigger, very closer to recession. I don't call it recession because they keep on printing money. So, there will see. I mean, it is going to be the problems are going to be deeper.
Okay.
U.S. influences the global economy a lot. So, India is also going to, observe carefully about the kind of strategies or the government policies changes in the U.S.
Yeah.
So, having said that, our Indian economy is, last 12 years or 10 years plus, with the new government, Mr. Modi coming back again, always the emphasis is on making Indian economy an independent one and self-sufficient one. So that is yielding good results, and in fact, not just yielding good results, not just for Indian economy, but we are showing path to many economists. When European economy has gone for toss, U.S. economy is struggling with this war between Russia and Ukraine, Israel and all others. We are actually showing a path as how the business have to be run, how the governments have to be run, and how we have to be more self-sufficient.
Yeah.
Where we went to Russia in the midst of war. We went to Russia and made an oil deal.
Yeah.
And we are not answerable to any US or any other big boys, big countries.
Absolutely.
Which was earlier. Now those are bold steps, but very essential to take. I appreciate that the government is taking the initiatives, and we are definitely as public, as professionals, we are seeing India is picking up.
Yeah.
And 2030, from wherever 5 trillion we are, we're around 5 trillion now. So 2030, I believe we will achieve at least double the economy.
That's the hope that we all have.
Yes,
so
yes. The same policy and the same things will continue. I'm sure we will achieve that.
So in Telangana, how do you think the financial markets are currently?
Yeah, the financial, last 10 years, the economy was majorly driven by real estate, I should say. So, real estate was booming for last 10 years, and we were, looking at some kind of slowdown that was supposed to happen.
Yeah.
So, though all the blame of slowdown is going to the new government that is formed, but I feel it is not, rational enough.
It was bound to happen at some point of time.
It is bound to happen sometime. So what happened in last 10 years is that, there is a lot of impetus given towards infrastructure development in Telangana.
Yeah.
It started from, Bhagirath mission, where, all the village economy or the rural economy has picked up because of a lot of water resources available to them.
Yeah.
The land prices have increased there, so the aspirations of the rural economy
also
and the migration has started coming to Hyderabad. So it started from there, and it also picked up with the special focus of building infrastructure in Hyderabad, like how many roads and bridges we saw in Hyderabad.
Yeah.
Post that. So that's all, that picked up from Bhagirath mission, and the rural economy picked up, and so the Hyderabad has
Also,
picked up.
yeah.
And so the real estate, the kind of aspiration, and that Hyderabad is as such a magnet of the entire, India, I should say, because it is cheaper. It was cheaper earlier. So it attracted lot of IT companies who came and settled down here, and that gave impetus to residential demand, and so we saw a lot of growth in terms of residential and commercial. Till recent times, it was, as I said, the growth was happening. Some correction we were expecting. That is because of the oversupply situation that has come.
Yeah.
So there we should give some time for the supply to be absorbed. Commercial is there is obviously there is a lot of commercial supply that has come up in last 5 years. Fortunately, even since even the last quarter numbers, the absorption of commercial space is happening. It has increased compared to last year.
So that's a good sign.
That's a very good sign. It's not enough, but it is a good sign. We are going in a very positive note in terms of commercial absorption. I'm sure that commercial absorption will again add, demand for the residential. So it's just a few more, couple of more quarters, I believe, the market starts picking up. And basically it has to be, I see the market going, I'm not seeing a great rise again in the prices or this one, but it will not go down. It will definitely be going standard in terms of the demand and the prices.
So I think a lot of individuals have that because they want to wait and see how the market's going to increase or stabilize or whatever it is. So as an individual today, what would you suggest? Like, is it a good time to invest, or if I want to invest, where do I invest? What are the options that a person has in this current market today?
See, for an individual, there are, I should say, 3-4 buckets of investment. So how much has to be invested in his package? At least I would say 1/4 to 1/3 is what he has to save. Any individual, any income generating individual has to save or invest, not save. Invest in at least 1/4 to 1/3 of the investment or his annual income. So the buckets available for them are, one is obviously gold, okay, and then comes mutual funds, and then comes your stock markets, and then comes the real estate. So I'm giving you the sequence based on the liquidity. So gold is easily liquidatable. As such, mutual funds, and then stocks, and the risk appetite, and the real estate. So there is a very common thread which has to be taken, which has to be chosen depending on the market conditions. If market conditions are if the stock markets are doing very well, we see the gold investments are not preferable. It's obvious choice that we invest in the individual invest in stock markets. So gold will have only some percentage of the investment. Then comes mutual funds and stock markets are alike in terms of allocation. Some money will go into mutual funds, some money will go into stock market. And then real estate is something is very close to heart, like gold. Like why an individual has to invest do invest in real estate is this plot I'm buying. Plot is buying. This is for my kids' future. Next 5 years, there is going to be an appreciation, and that would help me in catering to that particular need next 5 years, or 10 years, whatever it is. Same way, like a villa or like a apartment. Either for you to live it. So for self occupation. They look at, they invest, because each project it takes care of, takes 2-3 years of time. So naturally we keep investing, we take a loan, individual takes a loan and keep investing in that particular apartment or a villa, small villa, row houses, whatever you call it, depending on their income levels. So that is one investment for both for self occupation, and also maybe we are seeing a very good trend that the investment towards second house and third house are happening. That is basically to take care of the appreciation value of the investment.
But what is the fair amount of percentage of return on investment that an individual can expect? Because in the last few years, because of the rise in real estate prices and land prices, etc., I don't think it was a standard appreciation that you would see. But I think the expectations of people have increased a lot. But in general, in real estate, when you invest, what is the general thing that one can expect?
See, It's a very interesting question. I would also touch base a problem that the real estate industry is also facing when I come to this, giving a kind of, my open opinion about it. See, from a return perspective, say if I buy a second house as an individual, I give it to a rent.
Yeah.
Okay, what is the rent yield of a residential project? Say about 1.5% to 3% is your yield in residential project. Okay, that's an obvious choice, and that's the expectation of my investment in a second house.
Yeah.
So when I come into to a plot, so I expect. I'm saying I because I'm also an individual part of them. So I expect at least my return or my investment in a plot is doubled in a period of 5 years, ideally 5 years.
Yeah.
If markets are too good, it would be 3 years. If markets are bad, it would be 7-8 years. This is a very base case expectation, okay, which is good to myself.
Yeah.
Now, if there would be opportunities today, especially Hyderabad market pose a lot of opportunities in terms of quick returns. You invest 50% of the market value. Your return would be double in 1 year or 2 years by the time the project is launched. Some kind of pre-sales that has happened. So that is good. Bad is not what I wanted to advocate, but there should be a lot of caution when an investor, a person like me, in investing in such opportunities. See, this entire issue of pre-sales or giving that kind of discounts, are coming because of a ecosystem issue to the developer.
Yeah.
Not that the developers are here to take your investment and not fly-by-night operators.
Yeah.
They are giving these offers. This is important for an individual or investor to know why the developers are coming up with this kind of smaller developers. When I said mid and small developers are coming up with these things, because there is a problem which government has not addressed. It's an ecosystem issue.
Yeah.
What is that issue is, see, with RERA coming in, with GST coming in, see, the developer, the interest of the customer is saved by the government through a law. We have RERA. It says that the developer is responsible for the quality, for the timely delivery, all these things. Customer is absolutely safe, covered and safe by the government. That is the first step towards standardizing the industry.
Yeah.
Towards industry standardization, yes, protection of the customer is the first thing. But unfortunately, our government is not considering real estate as an industry, and they are not taking the second step towards bringing efficiency in the entire ecosystem. So where does so now that the entire cash flow a developer is building a project.
Yeah.
So if the project is there, and obviously though 70%, 30% free money available for the developer through RERA is only notional and is not operational, because obviously a developer takes a loan, and the lender obviously have the charge on the entire 100%. Even if there is no loan, the developer do not have that flexibility to use that 30% outside the business, outside this project. Obviously the developers are putting entire 100% in the completion of the project. So where is the raw material for the investment to a developer for buying their raw material, which is land?
Yeah.
So there is no resources for him to buy a land.
Yeah.
His resources will come only after the end of the project. So if the developer has to do one by one, how the economy will grow, how he can sustain his business.
Yeah.
It's difficult. So this is an ecosystem issue. Now, since the developer cannot put that kind of money to buy a land, which is a basic raw material for building a project, obviously, he has to find ways and means to do it.
Yeah.
So there are again 2-3 buckets for them. For the developer, if he has a sizable sizable balance sheet and sizable brand name and brand recall, so he can the developer can go and get institutional funding, like private equity funding, like land acquisition funding from the private equity funds and NBFCs. That too, only they will fund only 50% of the value of the land. Obviously, there is a lot of gap between in Telangana. At least there is a lot of gap between the market value and the registered value. So obviously, the more money has to go from the developer end, from his own packets, which is actually a problem. So how is addressing it? While some money will come, some money can only few developers can raise money towards land acquisition from the institutions. So basically, then he comes up with a scheme that you buy the land or there is a pre-sale arrangement before RERA, which are all wrong. But that's becoming more a necessity than a it's not that these developers the intention is to break the law, but this is what the need of the hour for them has to grow. So that's where these kind of investment opportunities are coming to investors. We have to be very careful in taking these kind of investment opportunities. It's good, bad. Again, it's very, the offers that can come are very, very lucrative. For an individual, it is very, very difficult to resist, say no to that, because of the requirement of the developers. So we have to be very cautious because buying any such pre-sale before RERA is not advisable. It has to be taken, a very cautious approach has to be taken towards it.
So now that as an individual, if I invested in real estate and I got a very good return, how does capital gains work? Do you think it's better to invest in another residential project or real estate, or to diversify my investments or my return on investment in different aspects? Like capital gains also is playing a major role, whether it's in the budget or whether it's in the financial rules of the country. So how can one say that, okay, these are my gains, and then what do I do with them?
So we are seeing some standardization in capital gains also, bringing global standards, I should say. So to save on capital gains, you have to better invest in another properties. That real estate would be a better option then to save this capital gains on it. So real estate, which segment you have to invest in, residential or commercial or plot, is something depending on the market conditions. A call has to be taken by the investor. But real estate is a better option to what we call to mitigate the if we make it capital gains more efficient that way for as an individual.
Yeah, fair enough. So as an individual, even to understand other ways of acquiring funds, so there are so many things that we keep hearing, whether it's NBFC or if it's a REIT or IPO, a company that's going IPO. So can you please just break down that a little bit for us and, as a layman, explain it to us?
So, for an individual, there are again, for an individual, there are a lot of loans, like personal loans, like, housing loans, you have mortgage loans, all kinds of loans are available for the individual. Same way, the corporates also have a lot of buckets where they can raise funds for their businesses. So the major sources, say for example, I'll take real estate because you're from real estate industry. So for real estate developer or for a real estate industry, the foremost fundraising should be through a project finance. Though a developer can have a deeper pockets, but still it is advised to take a project loan, because any gaps in that project or that particular loan will take care of that project gaps. So that is debt financing. Debt financing is available from national banks, scheduled banks, and NBFCs, depending on the rating and other this one. that is one loan one project loan every project should have it, and a developer should not shy away for that. So that will take care of the project execution of it. Then comes your what do you call the as I told you, land acquisition, funding for land acquisition. So funding from land acquisition happens through majorly through two sources. I mean, this is a new trend, where a lot of systems are being built towards it. While addressing that pre-sale and other things, I also touch base thus now as a secure. See, for the land acquisition, as I told you, few NBFCs are available. Funding is available to the developers through NBFCs. NBFCs they can fund about 50% of the market sale lead value of the land. So that is one other source for the developer. Crowdfunding is picking up. Crowdfunding platforms are now monitored closely by SEBI and RBIs. Yeah. So crowdfunding is something very useful for the individual, because that gives him good returns, anywhere between 15% to 20% IRRs for the individual. At the same time, that crowdfunding will help the real estate developers too in raising funds for their land acquisitions. Yeah. So that helps them, and that's all. There are AIFs, alternate investment funds, licenses. Many such licenses are available by SEBI, and by RBI to facilitate, tax-free or basically pass-through gateways. I call them for the investors to get best out of their investment. Yeah. So that also is helping developers in addressing their growth of the business, like project after project. There's the land acquisition funding is there, project finance is there. You deliver the project and make money. Yeah. Now we have IPOs basically to build the valuation of the companies. So we go to, any corporate will go to IPO. That's a dream of any business, any corporate to go to an IPO. Because that's we build like 10 years, 20 years in business. A lot of intrinsic value is built into the company. That value has to be, one is assess the value of the business. Two, how best you can, justify and how do we manage our valuations? Yeah. This is what important. That's where our IPOs plays a very vital role. So there are IPOs. There are again 2-3 layers of IPOs. Any corporate can go. One is the main IPO, which with the top line of say 1,000 crore plus. Some top line is basically the turnover of 1,000 crore company, plus. Okay. It's not easy to go to an IPO. It needs a lot of there are a lot of key, bullet points that need to be ticked off. There are SME IPOs too. SME is small and middle scale enterprises. They have a special platform for SMEs to go and raise IPOs. That is a bit simpler, and the eligibility criteria for SME IPOs are also much achievable, with 100 crore plus top line, and there are net worth around 20-30 crore net worth. So they can go into an IPO and they can raise funds there, and it's more easy to liquidate your shares and enhance your value of the companies. So these are all SME IPOs. This is basically for valuation and then take care of the gaps, whatever valuation gaps, and raise funds there.
So it sounds like it's good for the developer to get into an IPO, get an SME IPO, or get a NBFC funding. But as an individual, why should I invest in a crowdfunding, or why should I invest in an IPO that is real estate? Yeah. Because this is one industry that is sees a lot of curves. Okay. So why should I invest in a real estate IPO, or how is it advantageous for an individual to invest in one of these, whether it's a crowdfunding or a IPO or private
SME
equity,
IPOs.
which SME, whichever it is.
See, as you rightly said, the real estate has the curves, these curves are basically, I call them inefficiencies in the system. There is no standardization.
Yeah.
So while all other industries achieve, or go with a standard, policy and standard cash flow,
Yeah.
we do not have a standard cash flow. Any developer, he develops one big project this year, the project will be completed next year,
Yeah.
and you will see no project, and then again you see another project picked up.
Yeah.
So that's how it is not consistent. The cash flows of any real estate company is not consistent. So that's where real estate developers come with building commercial properties, rent yielding properties, and then they go to REITs and then IPOs and all those things, because there is a consistent, they show a consistent cash flow in terms of commercial space that they build, they operate, and they lease and operate.
Yeah.
So for residential, I have not seen any IPOs, any company going into an IPO purely who are into residential.
Okay.
Because there are curves here in residential. So I feel these commercial, we have few companies who are in IPOs, who are listed. So there the market capitalization and the PE returns are fairly good enough. Because of the scale they operate. So that is something that we can, that the investor, individual investor can obviously invest because there is compliances and there is constant monitoring of the companies, which and ensure SEBI and RBI ensures that the companies will do well in terms of compliances, not in terms of market, but in terms of compliances. That's good enough. So money is not diverting. All this will not happen with the company going to listed. So that confidence is there. The investor can invest in those IPOs. Crowdfunding is something that is picking up since last few years, 3-4 years now. Why the individual has to invest in crowdfunding? Obviously the return. Expectation, as I said, about 15 to 20% is what the crowdfunding we can expect. It is addressing the ecosystem issue of the developer. That's the reason they are able to get that kind of return. And the investor should be very careful in choosing a right crowdfunding platform, because it has to be a professionally run company. It has to. Now we have SEBI and RBI also monitoring them, because they have to report. All these platforms have to report to them. Till recently it was not there. I think since last 1 year only, SEBI is insisted that these platforms have to be reported to the monitor. They clearly monitor the performance of these platforms, where the money is coming from, where there is KYC or not for the investments, and where the monies are going, and how the funds are, what is the performance of the funds. So this has to be, the reporting is there. Reporting process is built in these platforms. This trend is picking up. The individual investor have to definitely consider this as a platform where they have to invest.
Wonderful. So as a individual or as a small developer or a medium developer, what are, we've seen the problem in the ecosystem where you said because you don't have funds to buy land, or these gaps that are happening, and that's why the different aspects of funding are being approached towards. So as an individual or as an entrepreneur or as a small developer, what is available in the market for me to get funding? What are my sources of funds in the market?
So for a small builder or aspiring builder who want to aspiring to from a tier 3 to tier 2, the one is the project finance. The access to that capital, we are thriving. That's my business philosophy also in Asia Pacific, that we give the right access of capital to the tier 3 developers, and guide them, handhold them to the tier 2 level. This is what we do as a philosophy, because it is very important for a smaller developer to have right funding partner, and some guiding, some mentor or some some company guides them, some consultant guides them through the next levels. Not just from a financing point of view, it's about understanding the market trends. You have your not only just financial resources, you should have human resources. You need to support them with right candidates, right employees. Do you need a CFO? You don't need a CFO. Then how all this planning should come, should happen, should be discussed without any shy away, so that we'll build a long-lasting organization.
Yeah. So
to start with, to start with, we need to have a project finance. Project finance is available. We raise about close to 2,000 to 2,500 crores every year. That goes into project finance. So part of this, bit of land acquisition funding is also possible, but this is not possible for a first-time developer.
Okay.
So for the first-time developer, we can always help him in raising funds for their project finance, basically the gap funding for the project. So for
how much land financing can be given? Like 50%, 30%? How much of that could be acquired?
So for the land acquisition, it's about 50% of the value can be funded.
Market value.
Sale deed value.
Sale deed value.
Okay. I wanted to be more precise because sitting in Telangana, it is very important to know this. Bangalore doesn't have this. Other parts of country do not have much of a difference between market value and the sale deed value. So 50% of it can be raised. 50% has to come from the own resources, through their internal accruals or their crowdfunding, whatever it is. And as far as project finance is concerned, we can also fund about anywhere between 30 to 40%, 30 to 50% sometimes of the total project construction cost as a benchmark, as a thumb rule. 30 to 50% of the construction cost can be funded.
And as an individual, like if I'm having a startup or I have a different business, where can I get the funding from? Like what list of criteria does one need to meet to get any sort of funding?
When we come about, startup in India, it's happening place for the startups. So there is a lot of ecosystem that is built for startups. A lot of venture capital companies that have come to invest. It can be angel investment, it can be Series A, Series B, whatnot. There are many funds in the Indian environment today to support startups.
Yeah.
The idea should be we have a lot of unicorns than any other world. India has produced a lot of unicorns that way. There are the individual, as an individual, who is intending or aspiring to become an entrepreneur. He has to build a strong network. He has to be in that spot where he is in know of people, is know of policies around, and in know of the bit of financial knowledge is also very important for a startup. Because a technocrat becoming an entrepreneur, it's a journey from knowing, being expert as a technology, but finance will be zero. It should not be the case. So you have to have the required financial knowledge. You need to understand what is investment, what are the returns, all that jargons. The individual should be very much this one. And we have a lot of places like T-Hub in Hyderabad is serving a lot of startups. There is a lot of space that is also available to network, and there are mentors who are constantly supporting, listening to our ideas as an individual or a budding startup. There are many mentors who are waiting to listen your ideas and give a framework of setting up your startup and also funding the startup. We also helped a few startups in a way in technology startups, but though it's not our core, but it's something very interesting.
So in API, can you give me an example where one or two examples where you facilitated a deal or helped them fund, and why it stood out?
It's an interesting. We have a lot of interesting transactions that way, because every problem is new to us.
Yeah.
It's not that we can correlate the problem with other, though within the same industry of real estate, I should say. One particular transaction is something. It's a huge land parcel which got some litigation between the developer and the landowner, which settled after say 12-13 years of time. The landowners became old and they did not want to sail through with that development agreement given to them 13 years back. So they had to buy out the developer share about close to 200-250 crores. So that's very, very complex transaction.
Yeah.
One is for us to understand the litigation, and not just we understand the litigation, but also make the institutions, financial institutions understand, appreciate and agree that the litigation is subsided and it's fundable.
Yeah.
That was a great challenge to us, and then we were supported by financial institutions which have funded for the land acquisition about close to 125 crore. This is something we thought very unique. Not everybody can do this.
Yeah, it's very hard.
And not every time we get these kind of opportunities for us.
Yeah.
Something which we feel very proud of it.
So what about funds though? Like are you at API, are you guys doing any doing a group fund or anything for real estate? Like where a bunch of people come together and create a fund to invest in particular industries and particular projects in real estate. Is that something that's common?
Yeah. Yes, it's an obvious trajectory for us to have our own fund.
Yeah.
So we are in the process of setting up our own fund. We have in the last legs of getting AIF license applied and get an AIF license. AIF is basically alternate investment fund. So where we can crowdfund.
Yeah.
But this is slightly we wanted to do a slightly bigger fund. So that we will our investors will be institutional again, family offices and institutions.
Okay.
Globally, and we are making a slightly bigger fund so that we get a scale to invest in any projects and and give good returns to our.
So how does this fund work though?
So basically, this again a crowdfunding. When I said crowdfunding, but it's on a platform which is licensed by SEBI and RBI.
Yeah.
It's called Alternate Investment Fund License, AIF.
Yeah.
There are again categories for each AIF. Category 1 only infrastructure, category 2 real estate, category 3 free, like this. There are a few categories where there is sector. Category 1 is sector agnostic. It has to only have to go to infrastructure.
Okay.
Sector 2, 3 and 4. Sector 2, category 2, Cat 2 is basically sector agnostic. We can invest in any other this one. So our fund is going to be in Cat 2, where it is though it is sector agnostic, but our focus is on real estate segment.
Okay.
So we are pooling funds. From family offices based in UAE, India, and US.
Yeah.
We're making it slightly around close to 500 crore kind of a fund that we are raising, where we'll be a general partner putting part of it. That is 5% to 10% of the capital will come from us, and the rest is pooled. And there are fund managers. We are also going to be the part of the fund manager, where we'll deploy it in those projects. Where we already have established relationships, nurture relationships with the developers, and make decent return, 15-20% is what our expectation is to raise this, and we distribute the profits to our investors.
Okay.
So because of AIF license, AIF is basically a tax pass through.
Yeah.
Like if there is a private limited company or a partnership firm. We make business and we make certain profits. We earn certain income. We have to pay the tax.
Yeah.
Whereas AIF, because it is as a fundamentally as a structure, it is crowdfunded. So for the AIF, there is no need to pay tax. It's pass-through vehicle. So we make money, we invest money, we pool money, invest, take the return from the investments and distribute to the partners. So it is taxable at the end of the investor, but AIF as such is not
taxable.
It's basically tax pass-throughs. So there are structures like this in India where we can pool money and invest money. That's all.
And what's like the exit strategy for this? Like, or would you suggest or tell someone how many years at least they have to put in that money? Like before putting a money, there's like some sort of vision that you have for that money or the ROI that you're looking at it. So is it 2 years? Is it 3 years? Or when is the right time to pull out? How can one decide that?
So the tenure or the lifetime of each AIF, each scheme of an AIF, we typically keep it to 5 to 7 years.
Okay.
Each investment, whatever investment that is made, it has to wait till the tenure of the project.
Okay.
Like we are investing in a 10 lakh SFT building apartment or residential complex. So for completing the 10 lakh SFT will take a decent 3 years time. So though our return keeps coming in, at regular time, it's not the entire income or entire return will not come at the end of the stake. We keep it because there are certain mechanisms, certain escrow systems we will put it. Any private equity fund or AIF will put it when we invest. So certain amount we keep taking out as and when the project has sufficient funds.
Yeah.
So on average, we'll be taking out money, these investments back from 2 years to 4 years time.
Okay.
So that's where we make our return and distribute the returns. So ideal time for an investor who is investing in AIF, 4 to 5 years is what I feel.
What you're looking at. Okay, great. That's actually very informative. So as in, there's so much to learn in finance. Like there's so many sources, so many things that fall into place when you're thinking about money, right? Everyone's making money and they need to put it in the right place. So as an individual also, when it comes to home loans or personal loans that people are taking, when it comes to home loans, how can an individual, there's so many, like interest rates keep changing year on year, or whenever the RBI rule changes or something that changes, as an individual, how can I keep track of this, or how can I be like, okay, this is what I am paying right now, how can I get a lower interest, or what is a smarter move to make in these situations?
See, home loans, basically how the individual will track is through EMIs. The moment there is an increase in the interest rate, then my EMI shoots up.
Yeah.
Start shooting up. That's a clear indication. However, housing loan is something treated as the priority lending by RBI and all other banks. So because this is a priority lending, the rates are quite cheaper when compared to any other form of loan, in housing loan especially. And chunk of good percentage of the funding allocation by all banks, like SBI, you need scheduled banks, you now have housing loan, housing finance companies.
Yeah.
Each conglomerate have their own housing finance companies, like Bajaj, Aditya Birla, Tata. Everybody have a housing finance company, which is a license to support housing. So there, maximum percentage of funds are allocated for housing loan because it's a priority segment, priority lending. So the rates are cheaper.
Yeah.
Whenever there is an increase in repo rate or base rates from the institutions, within the institutions, or influenced by RBI monetary policy, the EMI will keep increasing. Interest will increase, and the EMIs will keep increasing. So we have to be quite educative and also keep monitoring the policy, at least our EMIs, which we will certainly. And if we feel that we are there is an opportunity or there is an option to swap the loan, we should definitely look at those swapping. We should not delay that decisions, because I saw few institutions, though if there is a reduction in the repo rate, they delay these institutions. Some institutions will delay this passing through this benefit to the customer, because they wanted to make that bit of more money during that period. We have to go and bank them, get them, reduce my fee, reduce my interest rate because of the monetary policy changes.
But is that negotiable though?
Not really.
Negotiate like 0.25% or...
We can negotiate only at the beginning, not in between.
Okay.
So we have to better to move to the other institutions, and they will definitely, that's where we can negotiate better rate. And fortunately, to bring standardization, RBI also have removed the prepayment penalty. If I am in say SBI and I wanted to move to Canara Bank, for example, and if State Bank of India cannot charge me prepayment penalty for moving out. So it is free flow.
To just switch. Okay.
Yeah. So that is one thing, one facility that is there. We should definitely watch. If there is a abnormal increase in the EMI and they are not responding to the monetary policies, and if we are losing as an individual, we should definitely switch. There is no doubt about it. And it is free of cost.
Okay.
Free of cost in terms of prepayment penalty. There will be some processing fee and other things which other banks will also do it, but we can negotiate all those things.
But it's like 1% differential between two banks. Is that acceptable? Like, is it something worth of moving, or if one person keeps changing every year, so it's better to leave it there?
See, it is again a call to be taken. It also depends on the service level of that particular institution. It's not the interest rate.
Yeah.
Maybe even 1% will amount to increase, might amount to 1,000 increase in your EMI.
Yeah.
That is manageable. If it is manageable, it is manageable. But more than the interest rate, it is service. What kind of service the bank is offering, what kind of product they are offering. Like few banks are giving as a OD as an option. No other. See, if I have in my money, it's my savings account, my housing loan is linked to it, and they don't charge my, there is no interest on my, because that's lying in the account. So all these kind of product innovation, we should look at all those things while before switching to this one. It's not just the interest.
Okay, that's great. So so what do you think in the next 2-3 years? How are the financial trends going to change in Telangana or in India, because it's all correlated?
There is going to be a kind of fund crunch which we have to address in next 2 to 3 years of time. It's not though the market, because we are just moving from south to north. A lot of fund crunch is going to be there. From the independent investors or small investors should be patient enough. The market is not going wrong, but we have to be patient enough to understand this. And the developers or the businesses should ensure that they have enough financial resources tied up for next 2 to 3 years. Like you take instead of taking 10 crore loan, you take 15 crore loan. Don't use it, but keep it. Whenever there is a requirement, whenever there is a gap, you can use them. So that's what my guess is, that we have to be prepared well for the next 2 to 3 years, because we are in the transition phase. We also need to give time for Telangana government to understand and come up with decent policies, which I'm sure they will come.
Absolutely.
But till that time, we have to survive. The investors have to be patient enough, the small investors, and as developer segment, as real estate fraternity, we have to have more access. We need to sit on more money, though you don't utilize them, but you should have enough sources to it.
Okay.
And we should be, a lot of technology is being used in various industries. Even real estate is not this one. So that's another trend. A lot of prop tech companies are gathering, their products which are more useful for real estate segment and any other segment. Especially in real estate segment, I see tremendous utilization of technology. That's going to happen very soon. I'm already seeing few prop techs bringing in mind-blowing products for marketing. Basically data analytics. You have a lot of data and you have we're sitting a lot of data, and we can do wonders with that data.
So when we're looking forward for the next 2 years and being careful and the little cash crunch that's going to be, so when this happens, do the institutions also, are they also more careful, and are they more cautious about who they're funding, and how do we tackle that? Like how can API help in these times when everyone's trying to figure out how to make things happen?
One good thing about Indian economy as such, the NPAs are very, very less when compared to any other economy. This comes because of our culture, I believe. I'm proud of our culture, that either your house or business, we put our life.
Yeah.
We don't want our life go
Absolutely,
away.
yeah.
Okay, yes, businesses would be impacted because of changes in the market conditions and the trends. There are NCLT and other things that is being, they're in place today. I'm happy that, the resolutions are very, very professional and very progressive.
Yeah.
That's good for India. That's happening. So having said that, we have to, there are ways and means we have to address these things. Sorry, can you repeat the question? Sorry
I said,
for
like,
asking that.
how can like institution like API or a company like API also
The
caution me or let me know how to take this
So
forward?
the way the institutions are looking forward for it, they also understand that we are in the transition mode.
Yeah.
So they are as API because we have nurtured relationship with all these institutions the last 2 decades plus. So we are giving them heads up because all our eyes, ears and hands are on ground. We are giving them heads up that if there is going to be a slowdown, you have to be more supportive in terms of disbursing more money or enhancing the loan or whatever it is.
Yeah.
That support we are ensuring to our clients, to our customers, that there is no crunch in the fund flow or support that is going to come from the institutions. So I'm fortunate enough that the institutions are also understanding the business because they also every industry will go through ups and downs curves.
Yeah, absolutely.
So they are well positioned in terms of their funding capabilities and policies to support developers or the customers in going through this bit of slowdown, I believe.
And you work with a lot of different industries, whether it's real estate or healthcare and other industries as well. So which industry would you say is taking the most amount of funding or is showing the most amount of returns as well along with the funding?
It is a difficult question to answer, but I might be biased when I'm saying this is real estate.
Yeah.
Yes, real estate takes a lot of capital because it's capital intensive industry.
Yeah.
Other than the infrastructure. But the cycle of real estate investments, coming out of, when I invest in a project, I come out in 3-4 years. It is not the case with any other industry. Like infrastructure, if I invest in infrastructure projects, I need to wait for 10-15 years to break even.
Yeah.
If I'm investing in a power plant or I'm investing in a toll, in building a road and building a toll, I have to wait typically for 10 to 15 years
to get that,
to get my break evens, 7-8 years for my break even, and then I start by this one. This is something like not like that. It is it gives us quicker time, return in quicker time.
Yeah.
I should not mind if it is even giving less because from IRR point of view, it is one and the same. Time versus money.
Yeah.
So real estate, I believe, is taking a lot of investment. While the other segment is healthcare. Healthcare is also capital intensive and incentive. Of course, they are making all healthcare, especially hospitals in healthcare, are doing very well. Pharma is doing extremely well post-COVID.
Absolutely.
So whatever COVID could help them to come out faster, bring more efficiency, and in terms of bringing their capacities also to optimum usage of this thing that has happened through COVID. So they're maintaining it. Pharma are doing very well. Hospitals are doing very well. And healthcare is doing extremely well. And I feel the new technologies, AI technologies, more than the aggregators basically, like Uber, Ola, you name, all these are picking up. again, these industries will keep
Will
picking
also
up.
keep
Yes,
going up.
yes.
Okay. So you've worked in the industry for so many years and with like thousands of clients. So what are some of the financial learnings that, or financial opinion that you would like to give us?
Uh, it's very deep. So we have to be as a. I'm also running a business, though it's a consulting firm, but I will. There are many times that I get lured away.
Yeah.
I can lured away with whatever opportunities it is, but there should be a discipline. Financial discipline is the must. Is the key. I feel this is the first thing that we have to ensure, not discipline within ourselves, within the management itself. It has to perpetuate to the entire down the line the management too. We have to create policies that there is internal discipline, there is internal reporting, and all those things.
Yeah.
That is number one. Number two is compliances. We should not miss the compliances. Though we cry that GST is high and all those things, but still compliances are compliances. We should not delay our compliances. We have to be the first who are in terms of meeting the compliances, because our credit worthiness builds based on our compliances, how we are keeping our compliances. So these two are very, very important, and especially in industries like real estate, we should be more open for building our teams. We don't build our teams, unfortunately. We look at, especially in real estate segment, we look at loyalty rather than more than building teams and distributing the work or the responsibilities.
Yeah.
So that is not happening as much as it should have happened, or it should happen in real estate segment. I feel there's a lot of scope. The growth is tremendous, and you should build your team, and there should be delegation of powers.
Agree, yeah.
This is what real estate as a segment, as companies, growing companies, should definitely consider. We should not sit on power and see each and everything.
Yeah.
I feel it is better to build team, delegate powers, and then grow it faster.
I agree. So, sir, any suggestion for youngsters who want to get into the finance field or are interested or want to take this as their career path?
Yes, finance is something very wide, and investment banking is something I feel proud of it, because we know what we should not do, as I told you earlier, and we should learn what we should do. Skills are something that we can always build, like you understand your financials, you understand the businesses, all skills that we can pick up from our degrees. But what our degrees will not give is, or teach us, is integrity.
Yeah.
So that integrity is very, very essential for this young generation who wanted to take finance as a path, career path. It will take a long way. You integrity, you might have less skills, but more integrity. That's something what people like us are looking at, our finance heads are looking at. So build it. Skills will be built.
Yeah.
But integrity have to be cultivated.
Yeah.
So that's where I feel the youth has to understand this, imbibe these qualities, and I'm sure they have huge scope of growth.
I completely agree. I think we learned a lot from you today. There's a lot more into finance. Like, we can probably talk about it for the next 2-3 hours also. But we learned a lot from you today, and then to understand what all goes into it, or what financial discipline is and how important it is for an individual, is something that I think I picked up today. So thank you so much for coming on our podcast and sharing your knowledge with us. It was wonderful having you here.
Thank you very much, Meghna. It's a great opportunity for me also to come and share my thoughts with you and your viewers today. I wish you all the best.
Thank you
God
so
bless
much.
you.
Thank you.